So, Sebastian, you have a unicorn funding round here. Tell us what you're going to be doing with it.
Well, we're very happy to see that there's a lot of investors out there who are backing us. And we obviously have an ambition here to try to fundamentally change this banking industry that has lost, its focus on the customer, has all these flawed business models, which are intransparent, overdraft fees, all that stuff. So it's just very, very excited to see there's such a lot of support for us trying to transform this industry and make it better for customers, and feel very, very, strengthened and emboldened by the support to go after it, because it's up for disruption.
You've had so much user growth. I just saw 1 million users per month. When you look at that rate of growth, how sustainable do you think that'll be, especially as economies start to open up and people start going into stores again, as opposed to relying more on e-commerce?
Well, I think, look, fundamentally what we're doing, right, is we've really recognized that the idea of the credit card is that a lot of us listening today, we get free loyalty points and 30 days interest-free credit, and nobody's asking the question, who's paying for that? And unfortunately, there is a subset of customers, usually low-income customers, who are paying 29% revolving interest rates. And that's how the system works today. And it's fundamentally flawed. And we think that the buy now, pay later opportunity, offering 4 interest-free installments to everyone, equal to everyone, funded by the merchants who see the value in it because the consumers reward them with higher average order value and more conversion rate, is a better model. We think that's the future. We think it's a better future where people have debit cards and use buy now, pay later occasionally, like an installments. And that is as valid in store as it is online. I mean, we are already live in Sephora, in Macy's, and in Foot Locker stores, and over 80,000 stores worldwide. So we think the same will happen in the physical stores as we've seen online.
Sebastian, we love having you on. We also love having Max Levchin of Affirm, who was recently with us after earnings. You guys are saying a lot of the same things, driving the same messages about a different model from what credit cards have traditionally done. Are you seeing some of the same trends that Affirm talked about in terms of a broadening of the types of retailers that you're working with in this field? And is there a need at this stage for you to differentiate from Affirm, or is differentiating from the mainstream traditional credit card business still going to be the story for years to come?
Well, I think it's to some degree right. I mean, Klarna obviously being a global player, having 90 million users and covering 20 countries, we have had a lot of success with international brands who are active in the US and other markets as they're looking for a partner that can kind of supply that for all markets. But with that said, we cherish the fact that there are more people out there who share our ambition of trying to transform this industry. And I think we feel very fortunate to be in this like $1 trillion industry. It's not like there's a missing addressable market here. It's a fundamentally flawed industry, which is massive. And, there's going to be competitors that will share our ambitions. But in the end, if we all can contribute to that transformation, that's great.
Sebastian, a couple of questions. One is, there's been so much work done by macro strategists about at least the American household. And at the higher end, flush with cash, doing well on their home equity, doing well on the stock market, and maybe ostensibly a lesser need to use a product like yours. Does that limit the opportunity, do you think, in the near term?
Not necessarily. I think that what we're seeing actually is all income levels. It's not really, our product usage isn't tied to income levels. It's tied to people who are tired of the old system and looking for something new. And they know that the purpose why the credit cards is pushing these things is because they want to get me to revolve at 29% interest. The private label credit card is getting me all these discounts and so forth because they want me to eventually revolve. And a lot of consumers are dead tired of that. And so they find these models more attractive to them. So we don't really see that connection in that sense. And rather, I think an acceleration that we've seen. I think the reduction in credit cards, credit card applications in the US are down 50%. There's been over $100 billion of credit card debt paid down during the COVID crisis. But we think that part of that is also because people see the availability of products like ours and are shifting their behavior away from it. That's what we've seen in other markets outside of the US. And I would be surprised if that wouldn't happen in the US as well.
Shepard Smith here. Thanks for watching CNBC on YouTube.